Good morning, good afternoon, good evening. It's your boy Gary Scott, aka the Solid Pip Assassin, and today we're back with another live session. Guys, I appreciate you guys for getting on. I appreciate you guys for tapping in, watching the video in advance, to get you guys to the next step in your trading journey. All right. So, right, what I'm going to do today, guys, is I'm going to be showing you how I put everything together in order to how I put everything together, guys, so that way, you can put yourself in a position to win in the market. It is a difficult skill set, but if you got the right teacher, it can become very simple. All right. And it's about following the rules within the method so that way you can get to the next step. Okay. Um, so with that being said, let's get straight to it. All right. See, I'm having a little trouble here. Give me 1 second. All right, so we're going to start here. If you guys can see my picture here, let me know if you can see the picture. Um, for my people that are on the live with me right now, if you can see this image, let me know in the chat. Okay, great. All right, so this is the method that I've found how the market tends to operate more times than not. All right. So I call it the power of three. All right. If you notice, there are three of everything that is in this image that will tend to appear in the market, right? There are two more shapes that I do want to include that I did not include in the last session. Um, right? I went over the teacup patterns, the bullish and the bearish teacup, but now I'm going to be going over the particular channels in the market. Okay, so as well, so these two channels, you have your ascending channel and you have your descending channel. So when price decides to ascend, it's looking to head to the downside, and when the market is descending, it's looking to head to the upside. All right, so those are the two new patterns or shapes that I would like to give you guys. So that way you're able to decipher when they do appear in the market, what's going to happen next. All right. So also from there, you do have three major areas of value. All right. You have your fair value gap, your order blocks, and then you also have your structural levels. All right. There's bullish order blocks, there's bearish order blocks, right? When you think about a bullish order block, you're thinking about price moving within an uptrend. When you think about bearish order blocks, you're thinking about price moving within a downtrend. All right. And vice versa for the fair value gap, right? You got bullish fair value gaps and you have bearish fair value gaps that come into play. All right. Then you have your structural levels. All right. These are where you want to take your entries from, right? You never want to take your entries from space. You want to take them from structured standpoints. So that way you have a good idea of what's potentially going to happen next, right? On top of even having great risk reward ratio when you take them from these levels. All right. Risk reward ratio. If you've been on the sessions, even with Bobby before, right? Bobby is one of my big brothers in the industry, right? Like he's always said, right? He's always even told me, and I know this, right? I know this to be very much so true. Risk reward keeps you in the game, right? It's a long game, and you want to play the long game, right? This is not a skill set that you want to get into where you're looking to get rich quick, right? You're trying to gradually build your account to a certain amount, so that way you can continuously trade in the market day by day, week by week, right? Or year month by month, right? It's completely up to you. So right? I explained those three. All right. Now you have these particular patterns and shapes. You have these particular patterns in the market, right? The three bearish patterns that I want to go over first is the double top. When you see the double top, right, this appears at the end of an uptrend, right? But it starts the downtrend. All right. And sometimes you will get these three patterns even within a downtrend move. All right, to let you know that price is continuing to head in that direction. All right, so you have your double top. All right, your double top, you have your head and shoulders, right? Shoulder, head, shoulder, and then you have your triple top. All right. These, like I said, appear at the end of an uptrend and at the start of a downtrend. All right. Then moving from there, right, you have your double bottom, your inverted head and shoulders, right? Shoulder, head, shoulder, right? Feet are in the air, so we're aiming towards the sky. All right. And then you have your triple bottom, right? Price reached the same level 3 times, could not break that level. It respected it. And now we have price heading to the upside. All right. Then if we go on, you have your symmetrical triangle. Okay. Your symmetrical triangle. The symmetrical triangle can go either way. Price can go up or price can go down. But how you're able to decipher what could potentially come, right, is look at what happens before. All right. Again, let's make sure our mics are on mute. Also, guys, then you have your ascending triangle, right? When price is deciding to ascend, we're looking for price to respect this level of resistance, right? For price to fall to the downside. All right. Vice versa, when you have your descending channel, your descending triangle, right? Descending triangle, we're looking for price to head where? Back to the upside. All right. So I explained those to you guys, right? I also going to go over a live example so that way you guys can see all of these things, right, in the market in real time. All right. Now you have an uptrend, right? In the uptrend, you don't want to do anything but buy, right? You don't want to be doing anything but buying within the uptrend. All right. How you're able to decipher if it's an uptrend is if you look here, right? Price was transitioning and being in a downtrend. The moment that price took out that last lower high and then created a new high, that's indication that price wants to move to the upside. Okay. That's indication that price wants to move to the upside. So once it creates that new high, it's going to find an area of value that price can pull back to so where you can take your entry from. So let's just say for an example here, right? This fair value gap, right? This fair value gap here appeared in the market. Price came back to that fair value gap and it gave us a bullish candlestick confirmation pattern, right? Or a candle that closed bullish above your fair value gap. That's what you want to see in order to take your entry point. All right. That's what you want to see. You want to see a candle close above, or you want to see a bullish candlestick confirmation closing above your fair value gap in order to take the trade back towards the high that was previously created. Okay. Now, when you're doing this, you want to make sure that your SL is always going to be below your area of value from where you take your entry from. That's what's going to give you a great risk to reward ratio every time. All right, whether it's a 1-to-1, a 1-to-2, or a 1-to-3 risk to reward ratio. Okay. You take your entry from that point and you aim back towards the highs. All right. New high, right? Previous high got taken out, which gives you your break of structure. Price creates that new high. Now price is looking to retest back to an area of value. For example, price came back to this level. This level is an order block, right? What an order block is when it's in a bullish sentiment, right, is the last down candle before price breaks structure. So we want to come and find the deepest last down candle before price broke structure. All right. In this case, price stopped here. What we want to see is a bullish candlestick confirmation pattern closing above the area of value, right? So on, so forth. Price creates the new high. It gives you a break of structure. Price retests back to that level of structure, right? Price stopped here before. Price came back to this level again. And we want to see bullish candlestick confirmation patterns. Okay. Do I go over the candlesticks in this sessions? No, I don't, because I want you to use that time to go and study the candlesticks yourself and then come back and put it within the method that I'm already showing you. All right. Now you have a downtrend, right? Price transitions, right? It creates one of these 3 patterns at the top of the end of this uptrend for it to start moving in a downtrend. So now it'll be complete vice versa of what the uptrend was. So now, once you see a higher low get taken out and price creates that new low, we're looking for price to retest back to an area of value. The area of value price came back to, for example, here, right? It can come back to either three of them, right? But you want to find the deepest ones to where price can pull back to and give you a bearish candle closing below, with your SLs above the area of value and you're aiming towards the lows. All right. New lows being created, price retest back to an area of value, and we're looking for a bearish candlestick confirmation pattern, right, to close beneath the areas of value. Take the trade from that point. SLs go above this level, and we're looking to head towards the downside. All right. Price pulls back to this structural point. We want to see a selling candle confirmation, and then we're heading to the downside. All right. If that's made sense up until this point, right? Type of PO3 in the chat if this has made sense up until this point, right? For me, I like to repeat the same things over and over again because the market does that. All right. The market repeats itself consistently over and over again, right? That's what tricks people. All right. That's exactly what tricks people, right? Being on the charts and then thinking that the market is going to do something spectacular when it's naturally going to do the same thing over and over again. All right. That's the boring part, and that's the part that gets people tricked up, right? Into not playing it the right way. All right, not playing the trade the proper way. Okay. So now let's transition, right? And let's actually go and check out the real charts now, right? We're gonna look at this method in real time. All right. So what I want you guys to do, if you guys can see my charts right now, right? If you guys can see my charts, let me know, right? If you can see my charts, let me know. You can type a yes or whatever the case may be, right? To let me know that you can see my chart. All right. All right, cool. Everybody can see my chart. All right, let's move on and let's actually go into real time and see how these moves are being created in the market. Okay. Right. So let's go. Let's just say we start here, right? We're gonna start with oil, okay? Can anybody tell me what this particular trend is in? All right. What trend are we in here? Right? We're in a downtrend. So what should we be looking to do? Should we be looking to buy or should we be looking to sell? Right? If you say buy, you're absolutely wrong. But if you say sell or you say short or whatever terminology you would like to use, that's exactly what we're doing, right? We're not doing anything else other than selling because the structure of the market is telling us to do so. All right. So, right, remember I told you about higher lows being taken out, right? So, for example, here and how market shapes and patterns start a trend. Perfect example right here. What do we get? I just went over it, right? I just went over it. Can anybody tell me what that is at the very top of this market here? All right. Can anybody tell me what this market shape, our market pattern is, I should say, right? What market pattern is this here? The double top. There we go, right? The double top is created. The neckline of the double top has been broken, right? It's still creating a higher low standpoint. So that's not enough security for us to take this trade, right? We want to see a higher low being taken out. That's how we're able to identify that we can now start following the trend of the trade. All right. The moment that a higher low is being broken is the moment that we can be setting ourselves up to find a trade, right? To move towards the downside. You got your breaker structure, your new lower low is created. Now you're looking for price to retest, right? Now, Gary, what is a fair value gap? I'm glad you asked, right? I'm going to explain what a fair value gap is, what a bearish fair value gap is, right? You want to see space in between the bodies of these candles. That's what causes it being a fair value gap. So when I say space, I'm talking about this wick of this candle and this wick of this candle, right? They have to meet in order to cancel out the fair value gap. If they don't meet, that's what makes it a fair value gap. Okay. So if I zoom in, right, from here, from this candle's wick, right, to this candle's wick, if I drag that across, that gives us our fair value gap level. All right. You see the space in between the body of this candle? Price worked this way back up to this level, right? And all we want to see is a candlestick close below, right? That's all we need to see. Okay. So when that happens, you take your entry, right? Is every trade going to go straight into profit? Absolutely not. Get that out of your head. Is every trade, right, going to win? Absolutely not. But this method puts you in a position to win more than you lose. I'm going to tell you that because I've tested it multiple times. Okay. So you have your SL above your fair value gap, and you're looking to take the trade towards your low. And if you see this, guys, what do you end up getting? You ultimately end up getting a 1-to-1 risk to reward ratio, right? But depending on how you play it, you most definitely could get a 1-to-2, right? Everybody see that, right? Remember, I told you always want to go at your low, near your low, or below your low when you're having when you're looking at when you're looking to take a trade in a certain direction. All right. So boom, you got your entry point. You made money, right? Your lower low has been broken, which gives you your breaker structure, right? And I'm gonna show you guys another example on a different pair because I'm gonna show you that it works on everything, even pairs that I don't even like to trade, right? It works the exact same way. So you get your breaker structure, right? What ends up happening, right? Price works below that level, right? It gives you a lower low point here, price retest, right? Price fell down, creating a new lower low. What does price retest back to again? Back to a structural level in the market because this is what it is, right? We see how price is respecting this level from here to here, right? A multitude of times, not just once, but it did it multiple times. That's a structural level in the market. Price stopped here once before, came down, came back up to it, stopped again, came down, came back up to it again, and did what? Fell down one more time. All right. So ultimately, guys, what could this even be? Right? What could this be? If we're looking at this a certain way, can anybody tell me, right, if you're on a live with me, what this is based off of the things that I've already expressed to you guys and the things that I've already went over? Can anybody tell me what this is? Triple top. There we go. If you said triple top, you are correct. Right? It's a triple top at a structural level. Well, Gary, why is this a structural level? Why is this a structural level? Well, because price got here once time, right? And it rejected off this level and dropped, correct? But then price came back up again, dropped, came back up to this level one more time and dropped, right? Came back up to it a third time and dropped. So each time it came to this level, it took out a lower low standpoint, right? Lower low being taken out, right? What does price retest back to? Back to a structural level, right? What ends up happening, you got another close below that level. So if none of this is good enough for you and you wanted to see this happen, and like, okay, well, let me take my trade from this point because it came to this level again. I can have my SL really tight, right? With my take profit, right, being towards the low. And if you see, you got a great risk reward ratio, a 1-to-3 risk reward ratio here. And you didn't even have to go all the way back below this low. Okay. If that's made sense to you thus far, right? If that's made sense to you thus far, remember, all you want to see when you get to these areas of value, depending on what trend you're in, you want to see those particular candlesticks close below these areas of value. Once those candles close, that's the time for you to get into those trades to take the trade back to the levels that I'm teaching you guys to take them to. All right. So, boom. That was just an example of a downtrend. If that's made sense to you, type of PL3 in the chat. If that's made sense. Basically, everything that I went over right now, if it made sense, if it clicked, type of PL3 in the chat. All right. Shoot, all right. When this live becomes available on YouTube as well, shoot, type of PL3 inside of the comment section. All right. So boom, right? You made your money, you go about your day. Now, let's go to a pair that I normally do not trade, right? I normally don't trade a certain particular pairs, but this is a particular pair that I just want to show you, right? That it works on anything. And I will even go a better one for you, right? Because I know a lot of people like to scalp, right? I'll go on a smaller time frame, right? To show you that this same exact method that I'm showing you, that it works, right? No matter the time frame, you just have to follow the structure of the market. What do you have here? You have a double top at this point, which could also even play as an equal high, right? When equal highs are being created in the market, let me show you something, right? When equal highs are created in the market, that's letting us know, right? Equal highs being created in the market, that's letting us know that price wants to surpass that level. All right, so price created this lower low point right here, right? Price end up taking out this previous equal high, right? When price decides to retest, right? When price decides to retest, where is it going to retest to? That's the question you have to ask yourself, right? Where is it going to retest to? Is it going to retest back to the last down candle before price broke structure? It most definitely could because that's the order block, right? You also have an order block that's deeper than that level, okay? From here to here, right? From that entire sell candle, that gives you your order block, right? So what are we doing? We want to see price continuously close above our area of value. So let me mark it off as such. You get your demand zone, right? Price creates that new high. We want to see bullish candlesticks closing above this level. If we see bullish candlesticks closing above this level, that's indication that price wants to move to the upside. So for me, if I'm looking at this and I see this and I catch it at some point, and let's just say I catch it from here, right? The moment I see this candlestick close above, my SL is going below my order block and I'm aiming towards my new high that was previously created. And if you see this, it gives us a great one-to-one risk to reward ratio in itself, right? You will win way more than you will lose. All right. We drag that across and we see take profit takes out our previous high that was created. All right. Let's go down to let's scoot up, right? We have a price shot up to the upside. It created a new high, right? It created its new high. We eventually end up getting that break of structure, right? But when price creates that new high, it's looking to retest. Again, where's the levels that it can retest to? A fair value gap, an order block, or a structural level. In this case, when price decided to retest, right? What do we see here? Can anybody tell me what this level is right here? If you know, type it in the chat. If you don't know, I'm going to tell you, right? That's a fair value gap right here. So there's a reason why price stopped here, right? From this candle's wick to this candle's wick, they don't meet in between the body of this candle, which gives us our fair value gap level, right? We mark it off as such. What ends up happening? Price rejects off of this level and it's continuously closing bullish above our fair value gap zone. Okay. So now if I'm looking at this, right, I can simply take my entry from either off of the rejection or I can take it off of this candlestick, and either or is fine. But for me, right, boom, that's my fair value gap. Price goes beneath, my SL goes beneath my fair value gap, and I'm aiming towards the highs, right? And you see how price is always going to give us a great risk to reward ratio, but you still allow yourself to have room for your trade to breathe, right? You have traders where they like to use tight stop losses and they'll lose a trade and then they could potentially even miss the true real move of what's really finna happen, right? But if you give your trade room to breathe, you're allowing yourself, right, a chance to even to allow the trade to play out in your favor. Okay. All right, everybody got that? So what ends up happening? You get your break of structure, price creates that new high. Where are you looking for price to retest? Again, we have another fair value gap here, right? Boom, boom. This entire setup is a fair value gap. We see how price has respected that level. It never closed below, right? It always eventually end up closing above. So if I wanted to take this trade, guys, right? I can enter after, let's just say this candlestick closes above the level. My SL is below my area of value, and I'm taking a trade back above my highs. All right. You got that? You get your one-to-one risk to reward ratio. You go into drawdown a little bit, and then price works in your favor. All right. If this has made sense to you thus far, right? Type of PO3 in the chat. If everything that I've been explaining to you up until this point has made sense, right? Type of PO3. If you got any questions and you're on the live with me, if you have any questions, type a one in the chat. All right. And then I'll make sure I answer those questions for you. All right. But if this is good for you, if this is making sense to you, right, that's awesome. All right. Because now it's going to cause for you to just be repetitious when it comes to the market. All right. You got to be repetitious because the market is repetitive. It's extremely repetitive. Right. Which is why every session I get on, I preach some of the exact same things over and over and over again. Okay. So boom, you got those examples. I explained it right on a different chart. I explained it on a different time frame. Some of the same things still apply. Okay. All right. So boom, right? That's pretty much the market, guys. That's pretty much how this works. That's pretty much how the market operates. That's pretty much where the price will, get its levels to where it can buy and or sell from. Okay. This session will be, right? This session will be on my YouTube channel. All right. It's going to be under the Solid Pip Assassin. That is my YouTube channel, the Solid Pip Assassin. And then there's a multitude of videos that I do have on there, right? My previous sessions are on there. Um, Me catching particular, trades that I've caught throughout last year are on there, right? Whether they're a win or a loss, they are on there. And I also have strategic videos tailored to particular methods that I use, right? Like the order block, fair value gap, so on and so forth. Okay. So if you do want to catch my YouTube channel, you can do so. Again, it's the Silent Pip Assassin. The Silent Pip Assassin. All right. My Instagram, it's Gary Scott Official. I do have videos on there as well. All right, little 1 minute clip videos explaining the same things that I've also explained in this session, but in a very small snip. All right. Um, with that being said, guys, it's the end, right? It's the end of this session. I appreciate you guys for getting on. I appreciate you guys for watching the video, right? And with that being said, guys, I see you on the next session. That being said, guys, I appreciate you guys. You guys enjoy your weekend, enjoy your day, and I'll see you next time.